Welcome back to Trading with Kale. If you've been following the channel over the last week, you know I spent a lot of time talking about the heavy tolls of the market drawdowns, managing frustration, and surviving account traps. But tonight, I'm completely flipping the script. The energy is officially turning around. I'm 2 days into the brand new trading month, and my structured recovery plan is proving its value on the charts. So my record for the week stands at 2 solid wins and 1 minor loss, and the account is steadily climbing back up to where it was. More importantly, the mental fog is gone. And tonight's video isn't about surviving an emergency, it's about operational mastery. And I want to show you what it looks like when a technical strategy starts clicking into place across multiple different tickers. How to handle a mixed trading session with complete composure, and how I'm using strict mechanical parameters to build this account back brick by brick. So let's get straight to the chart so you can see exactly how this rhythm is developing. So on Monday, I kicked off this month with a flawless execution on NVIDIA. I mapped out my 8 a.m. hourly range here and watched the 9 a.m. candle sweep the low uh, to engine perfect discount liquidity. And I bought my June 18th $218 call right around the 10 a.m. open. There, I dropped down to the 3 minute. There was a bullish fair value gap that formed on that 3 minutes. I entered. I scaled it out perfectly, exiting around 2 p.m. candle at the height of that for a 28% gain. And then if we go into today's chart for Tesla, I did the exact same thing. So instead of like forcing another trade with NVIDIA, I looked at I stayed patient and really let the broader market layout unfold. So I did turn my attention to Tesla because I saw that the 9 a.m. range was setting up. I marked my 8 a.m. high and low, waited for the 9 a.m. candle to sweep that, then entered around, I'd say 10:15 maybe, or somewhere around there. Um, and I wrote that up right into the height of this candle. So I executed both of these right inside. Oh, sorry. And my target for this was 422. So I exited at it was like 422.07. So I exited right about there. And I knew it would stall out because on this 8 hour time frame, we did have a bearish fair value gap. So I saw profit, I took profit, and was really happy about how that trade played out. So both of these were right inside my execution window. Um, and seeing that, exact same discipline pay off on completely different stocks back to back proved to me that my liquidity concepts are repeatable when I let patience do the heavy lifting. Now let's look at the other side of the session, because true insight comes from auditing every single fill. So later in the morning, I looked for a second setup on NVIDIA, and the technical setup itself looked great, but I had an active limit order resting right about, let me just show it to you. Right here, there was a gap, a volume imbalance there, and I was looking for price to tap down into that and explode back up to the upside to go to that 235 liquidity pool area. Because that limit order was so it did the thing. What happened was the entry didn't trigger before 12 p.m. Eastern. That's when I'm not supposed to take new positions, and I left that active. I should have closed that out, and it dragged me into a trade after my window had already closed. The position just stalled out. As you can see, previous day close was my stop loss, and I had to get out about here because we got that hourly candle close about the 1 p.m. candle. So momentum shifted. I ended up giving back a portion of the morning gains. But notice the difference in psychology here compared to last week. There was no panic, no anger, no urge to revenge trade. Instead, this trade gave me incredibly valuable insight. I need to get much better about closing out losing trades quicker. I definitely think I could have closed it out like right when I saw us losing that previous close. Instead, I let the entire candle close. Um, so the exact second that momentum shifts or a parameter is breached, or the thesis is invalid and the contract needs to be cut immediately. So leaving that limit order open was a minor mechanical error, but now I know how to patch it. So I'll be honing in on that tomorrow. I'm trading with total clarity right now. I took 2 beautiful wins, accepted 1 minor loss, I adjusted my execution, and I'm moving forward with absolute confidence. So tomorrow morning is going to be probably my final trading session of the week because I will be heading out of town on Thursday and Friday. And since I'm taking those 2 days off, tomorrow's all about finishing the week strong and staying compliant with my rules. So my main watch list for tomorrow morning are locked in. I'm keeping my focus strictly on 5 high cap tech names: Tesla, NVDA, Google, Microsoft, and Meta. And I'll be sitting at my desk um, before market opens and marking out my 8 a.m. hourly ranges and waiting for 9 a.m. sweeps to print. Drop a comment below. Let me know if you caught that morning move on Tesla or how you manage your resting limit orders as the clock winds down in your trading window. Remember, stay disciplined, protect your capital, and I'll see you in the market tomorrow morning.